Alrighty, guys. Welcome. This is Dave Santarelli from the Santarelli Trading Exchange. Like I said, this is going to be a short video, intro to options to all of you that are new to trading options. Later on tonight, I'm going to be doing an advanced class for TSE members, and we're also going to do a recap of our current positions and go over some stocks and charts to watch for the upcoming week. So first off, I have my profit account here pulled up on eTrade Pro. And first, like I said, I'm going to go over what stock options are, basically calls, puts, and then I'll talk a little bit about spreads. So basically, guys, let's take a look at Amazon, for example. Guys, I still hear microphones on, so please shut your microphones off. Alrighty, so again, basic calls and puts. A call, you're going to, guys, please turn the microphones off. I have no idea how to do this yet, so I will be finding that out after. But please turn your microphones or your volume off for me, please. Alrighty, guys, so basically, if you're bullish on a stock, you think a stock's going to go higher, you'd want to enter into a call. And if you're bearish, you're going to enter into a put. And basically, all a call is the right but not the obligation to buy a stock at a particular price known as a strike price by the expiration date. So let's go over just a quick example here. So for those of you that have never traded calls or puts before, let's use Amazon as an example here. Or better yet, let's go with Facebook. It'll be easier numbers here for you guys to follow along with. So right now, let's say we're looking at the August 17th Expo. So the expiration dates are as follows. You have your weekly expiration dates and your monthly expiration dates. Your monthly expiration dates are the third Friday of every month. Anything other than that are your weekly expos. Your monthly expirations are going to be the ones that have the more open interest, higher volume. And if you're making larger trades, you really want to stick with the monthly expos. So for here, coming up this Friday is going to be a monthly expo. August 17th is the third Friday of the month. So let's take a look now at Facebook. So basically, all I call is you see Facebook up here trading at 180.27 a share. So if you buy the 180 strike call, it's saying here theoretically you could get that for $2.54 a contract. Now, since there's 100 shares in a contract, you're going to have to multiply that by 100. So one single contract of this 180 strike call for Facebook for this week's expo is going to cost you $254, and you're going to have control over 100 shares of the underlying stock for this expiration date. So let's take a look at how this will look. So let's say we got 10 contracts calls for the August 17th Expo, the 180 strike. As you see here, it last traded at 258. It has a bid of 250 and an ask of 257. So it's given us, the last traded price 254, but theoretically 254. So if we look at that, if we put in an order, usually it's 5-cent increments on most of the larger stocks. I'm not sure how Facebook is, but if you put in an order right now, it should get filled at around 254. So if you got 10 contracts of Facebook, it's going to cost you $2,540. Okay, so let's just stick with one contract for now. Make it simple for you guys. So basically, if you're buying the 180 strike call for Facebook for this week's August 17th monthly expo, your break-even point is your strike price plus the premium you paid. So in this case, it would be the 180 plus the 254. So if Facebook reaches 282.54, you broke even. So then to look for 100% return, you need it at $2.54 higher. So at 185.08, this call would make a 100% return. And then if you're looking for, let's say, a 200% return, you just add another 254 to that, and at 187.62, you're looking at a 200% return. Okay, so like I said, basically all you're looking at is your break-even point, which is your strike price plus the premium paid, and you need the stock to be above 180 a share by August 17th for you to realize any type of returns. So also, we could get into the Greeks later on, the delta, thetas, and all of that, but guys, I don't know what you're doing here. It's saying you're raising your hands and things like that. Please keep all questions and comments until the end, as I can't be looking at the chat during this. I promise we'll do Q&A at the end here. So like I said, you're looking for your break-even point. So if you're looking at a chart of Facebook, which let's bring it up. First off, I wanted to show you guys how important it is to chart, okay? We're going to be going over this a little bit later on, but if you're looking at a chart like this is Disney. If you're looking at a 1-year chart like this, or even if you're looking at a 3-year chart, or here's a 6-month chart, you're really not getting anything from this chart. So when I'm making up charts for my trade room or for alerts for members, I always like to, even before entering any trades, or if there's any stocks on my watch list that I might be trading this week, I'm going to drop those charts, drop the support resistance areas. I'll add the SMAs, RSI, MACDs, and better get a feeling for what I feel that stock's going to do. So I already have Facebook written up here because we did get into some Facebook trades earlier this week. So basically, when Facebook was right here at, this was on August 1st, I told members that after, obviously, you guys remember Facebook reported a horrible earnings. The stock dropped over 25%, went from a high of almost 220 all the way down to like 165. So, you guys could still hear me, right? Got a pop-up about the audio here. But anyway, so Facebook dropped down to around 165, 167. And I told members to watch out for a flat line here, a baseline forming for a possible hook pattern. All right, we got into a Facebook trade, and I told them, like I said, to watch out for the hook pattern. Actually, in the Facebook group too, if you look back right around July 26th to August 1st, I actually posted in the main Facebook group, Day Trading Stock and Options Room, to watch Facebook. It was a Sunday. I said, guys, watch. It's going to form a nice base here, and we're going to see a hook pattern. And I drew up this chart, posting the 185 as the resistance area number 1 that I felt it was going to reach, and then we had some support around 172-ish. So as you see, as we go along here in the next few days, Facebook immediately got back up to that 185, 186 area, actually got up to almost 190 again. And we took some profits. We made a quick 120-some%, and we exit out of that trade. But anyway, back to what I was saying here. If you're looking at the option chain, you're looking for patterns that you want. So let me put the option chain alongside the chart here. So when you draw up a chart, and if you're going to enter into a trade, you're going to ask yourself first, where do you think that stock's going? You want to know your exit points and your target profit areas. So like I said on this chart here, I said, guys, if it got down below 172, that's going to be our exit. And once she gets up to 185, we could start taking profits. And when it got up to around 185, 186, we took our profits. We ran. Obviously, it went up a little bit higher than that, but we got out at our target. And that's important when making a trading plan. Like I said, you want to have your profit target areas and your stop loss areas already planned out before you enter into that trade. So let's use this for an example with just regular calls on Facebook. And let's say Facebook right now is at 180.27. Okay, let me use the delta on here quick just to show you guys something. All right, so basically a delta, all that means is for every dollar the stock goes up, that's how much this option is going to increase in premium. So as you see here, the 180 strike call for Facebook at 254. If Facebook goes up $1 tomorrow, this premium here, the 180 strike, is going to increase by 53 cents. So it would be at 305, or I'm sorry, for 307 a share, or 307 a contract if you got this now and Facebook went up $1 on Monday. So the delta is a nice little way to kind of guess where your option or your premium is going to be on any type of move. Okay, so like I said, if you got into the 180 strike call on Monday, and let's say you had the 185 as a target, and as you see here on August 6th, Facebook went from 178.20 all the way up to around 186. So it had a 4-point move that day. So let's just say theoretically Facebook went up 4 points on Monday and got to 184. Okay, so basically you're just multiplying your 4, the move that it's going to have, or you're expecting it to have, or if it really does have. So 4, multiply that by 0.53. This premium here is going to increase by $2.12. So 2.12 plus 2.58. So Facebook had a 4-point move on Monday. This premium here that you paid $2.58 for realistically could be worth around $4.70, which is close to a 100% gain, 90-some% return. 4.7, divide that by 2.54. You'd be looking at around an 85% return if Facebook had a 4-point move. Okay, so let's use another example here on something that's not as volatile like Microsoft. Guys, please put your microphone on mute. I can hear some background noise. All right, so Microsoft's not as volatile stock as some of these other ones like your big tech companies. So Microsoft here, the 109 strike is going for about 84 cents a contract. So at 109.84 is your break even. And then if you want to make 100% return on this, we need this at 84 cents higher. So at 110.68, this 109 strike call is going to make 100% return. All right, and like I said, for a 200% return, you just add another 84 cents to that. So at 111.52, you'd be looking at a 200% return on Microsoft from now until your expiration date, which is August 17th. All right, now let's talk about the risk. What's your max loss? And let's go over like a stop loss scenario here. So if you entered into that 109 strike call for Microsoft, like I said, it's 84 cents. You have to multiply that by 100. So it's going to cost you $84 to have control over 100 shares of Microsoft above $109 a share. So if Microsoft's at 190.50 on August 17th, obviously you paid 84 cents for it, and you have the 109 strike. If it's at 109.50, it's only going to be worth 50 cents. So you just lost 34 cents a contract, or $34 per contract. Okay, if it's below 109 on August 17th, then it's worthless and you lost your entire $84, or whatever you have, however many contracts. If you have 10 contracts, it's going to be worth $840 investment, and if it's below 109, you have a total loss. That's why it's important, like I said, to draw up your charts and realize where you're going to take your exits and where you're going to take your profits. Do we have any questions on the calls so far? All right, so now let's go over some examples here. All right, so now I'm going to go over the 3 types of charts that I trade every week. These are the only 3 types of charts I look for. These are the 3 types of setups I look for. They are your hook patterns, your breakout momentum, and your range bound charts, you know, ones that are trading in a channel or within support and resistance areas. And perfect example of that is booking. So let's use the range bound, like a stock that's trading within a channel or trading within support and resistance area, and booking is a great example for that. So booking for, let me get this one out of here, that's not the right chart. All right, so let's take a look at this chart. This is a chart I saved on booking on 7/17. In the trade room, I'm sharing pictures of charts all day, showing members where support areas are, what we're looking at, what we're expecting stocks to do. So on July 17th in the trade room, I sent this out. I might have sent it as an email alert as well. I said, guys, look at how every time on booking it's trading within this range from February until August, until they just reported their Q2 earnings. It's been trading within this tight support and resistance area. Every time she's been bouncing down to the lower yellow band here, which is the support area, it's getting a nice bounce higher. So as you see here, this is where we actually entered into one of the trades. And as you see, here is so that was from the 17th. August. Okay, so we entered the trade into there, and we had a target area of 2,100 a share. As you see there, I can't see, it's a little bit small there. Let me zoom it in. So booking was at 20.30 a share right there. I said, guys, we're going to take our profits around 2,100, and on the 26th, which was just about 9 days later, we took and locked in over 127% return on booking. So here's just one type of pattern that I like to trade out of the three. Like I said, we have the hook pattern, the hook pattern, the momentum breakout, and the range bound. Now let's take a look at a few other ones here. Okay, so here is what I like to do with my charts. Let me zoom this in a little bit more here. So as you see, whenever I post a chart, I always put the date up there. This was on July 24th, ABBV. We had a nice little hook pattern forming. The stock was at $90.49 a share. And I said, guys, let's have a target estimate of $95 to $100 a share here. We could get some regular calls. I gave them a few other options if they wanted to go with a spread or some calls. And let's take a look then and see what it did. So as you see, this was the day that I showed you guys. We entered into the trade. Let's do side-by-side comparison here. All right, so this was on the 24th, and if we go back over here, we could see the 24th was right here. And as you see on this other side over here, the stock was at, like I said, $90.49 a share. So we set the $95 to $100 a share as the target price, and it quickly got above that and went all the way up to a high of almost 98.50. So let me bring this one over here a little bit more. So that's why it's important to always have, that's what I try to teach, is to have a setup before you enter into a trade. Because if you're just looking at a chart like this, if you use stock charts, or if you're on anything else like I said, we gave this one before on Disney. If you're looking at this, it really isn't telling you much. So it's important to drop the charts like I have here. Let me go over some of the things I use. Okay, so as you see here, this is the Qs, QQQ. Every chart I always make, I mark up like this. So as you see here, we have support at 177.50 a share. We have resistance at around 183 a share. The SMAs I use are the 10, 20, and 50 day. And if it's a trade longer than 2 weeks out or further, I'll also use the 200-day SMA. If it's a short day trade, I'll also use the 5-day. But on your charts, you should always have the 10, 20, and 50-day SMAs to help you along with a trade. So like I said, whoever has the kid in the background, please shut off your microphone. We could all hear it, and some of the members are complaining about that. Thank you. Alrighty, guys. So like I was saying here, whenever you're looking at a trade, a possible trade, you want to, first, let's do it together here. So on this blank chart at Disney here, if you're looking at this, it's not going to tell you much. And you want to be able to have as much information as you can to, before you enter into a trade, set up the areas of support, resistance, where you might take your stop loss at, and your target. Too many people get into a trade, they don't know where they're going to take their profits, and then if you don't know where you're going to take your profits, that turns into greed, and they're going to just keep thinking that the stocks are going to go higher, 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 and then all of a sudden the next day you're going to see profit taking, and your profits are going to be gone, and you're going to be kicking yourself in the ass for not taking those profits when you had. So it's important to always have your profit target area and your stop loss. So first off, let's use the SMAs. I'm going to go over this with you, how I set up my charts to help you guys out. So for the 10-day, I always put that as yellow. Okay, and then let's go back here. We'll do the 20-day. I usually use that as a bluish. And then the 50-day. And that I'll usually keep red. And then like I said, if it's a longer term trade, you could add the 200-day. If it's a shorter term trade, like 7 days or less, you could use the 5-day for your entry and your stop areas. So we'll keep these here for now. We could use the 200-day. Let's see. Should I put that as a pinkish? All right, so there you go. So you went from a chart with nothing. Now we have the SMAs up. Okay, that's the first part. Second part, let's go out a little bit more here. All right, so next thing we want to do is put our support areas. So we could draw that, put a line up. Usually I make the support areas red and the resistance green. So as you can see, we have support right around where the stock's at now. And also, if we want, we could draw a channel. And you could draw a trend line on a channel here. So there, now we went from having nothing on the chart to our SMAs to our support areas, and we also have a channel here on Disney. Okay. Now let's see. If we want to add a resistance area, it's as simple as this. So there we go. Now looking at this, what chatting tool are you using? There's a chat feature here. If you click on the top or bottom, you could click the chat and type your comments in there. All right, so now what we did with Disney, we took it from a basic blank chart and we added some indicators and tools here for us. We added the 10, 20, 50-day, the 200-day SMA. We added the resistance area, and we're also adding the support area. So as we see now, we just went from a chart of Disney with nothing, and now we have some type of guidance here. It's E-Trade Pro, Dave. So now we have some type of guidance here to help direct us towards what this stock may do in the coming days, weeks, or months. So as you see here, if we're looking back, I like to study what a stock does with the SMAs, how it reacts to certain SMAs, to support resistance areas, and here, since we've drawn a channel, we can see how it's interacted within that channel. Okay, so basically right now, if we're just looking at Disney, we could say, okay, the stock's at some type of major support right now, going all the way back from December to February of this year. So if we do, and it's also holding up here at the 20-day SMA, which is the blue line. So we could say to ourselves, if you're bullish on Disney or bearish, it doesn't matter. What we can say here is, A, if we get a bounce off the support area right here, there's a good chance that we're going to head back up to that resistance area of around 16 or 18, 116.35 a share. Okay, so it's at 112.69 right now. So if Monday comes along and we see a bounce off this support area, we could do something like an in-the-money spread, which is, let me go over spreads with you guys quick so you're not confused about what happens here. So let's do an example on Disney here, since we already have this pulled up. So basically a spread is, it's very simple. You're buying a stock at a certain price. In this case, let's use the 112 strike as an example. Okay, so it's just like a regular call option. You're buying the 112 strike call, and then you're selling someone the right to your shares of 112 at a higher price. So you're buying to open your call, and then you're selling to open a call for the same expiration date, and that's going to be higher if it's a call spread, lower if it's a put spread. So in this example, let's do the 112-113 vertical bull call spread for August 17th monthly expo. Okay, so as you see here, it's telling us we have a midpoint of 55 cents a contract. Okay, so it's going to cost us $55 for the single contract. The most you can make with a spread is the difference between the two strikes. So the difference between 112, 113 is $1. So if you're only paying 55 cents for it to be worth $1, that's a max net return of 81%. So all you need Disney at is above 113 a share by August 17th, and you're going to make that 81% return. Okay, now we could even go further in the money. Let's say we bought the 111, 112 call spread. This is going to cost a little bit more because the stock's already fully in the money. So it's going to cost around 79 cents. Let's round it up a bit. So you see it says 0.695. So let's say it costs 70 cents a contract. So $1 it could be worth, divide that by 0.7. We have a max net return of 42%. Now this is really important because this is how I do my paycheck trades. I do a paycheck trade if I feel that there's a high probability of a stock being within that spread or going higher. I'll go over examples of a paycheck trade on a spread as well as some calls in a minute here. But in this example here, we're going over a spread. So let's say we bought the 111-112 strike call spread on Disney for this Friday. All we need is Disney above 112 a share by Friday, and we're going to make a 42% return. Okay, so we're paying 70 cents, which is $70 for one single contract, and that $70 is going to be worth $100 on Friday as long as Disney's above 112 a share. Okay, now our break even on this is the call that you bought to open plus what you paid. So 111 plus 70 cents, your break even is with Disney at 111.70. So Disney right now could drop an entire dollar. It could drop 1%, and you're still going to be in the money on this trade. Okay, so now anything above your break even, so like I said, 111 plus 70 cents is your break even. So your break even is at 111.70. Anything above that, you start to make money. Anything above the price of the strike that you sold, the 112, that's where you're going to have your max gain at. So you're going to make that 42% return if Disney's at 112, 113, even if it's at $200 a share, you're only capped at that 42% return. Okay, so that's a great thing about buying in the money spreads. You can make a quick 42% return like in this example, and the stock could drop by $1. It could stay where it's at, or it could go higher, and you're still going to make a great return of over 42%. So like I said, let's go a little bit further out of the money now. Since we said it could get up to 116 a share, let's do something by going and buying an out of the money vertical bull spread here. So for example, if we bought the 115 and sold the 116, this is what's amazing, guys. I want you guys to understand this. So if you bought this spread, it's only going to cost you 14 cents or $14 per contract, okay? And the max it could be worth is $100. So you're basically saying, here's $14 for this spread, and it could be worth $100 on August 17th as long as Disney's 116 or higher. So divide that by 0.14. This trade here has a max net return of 614%. So if you enter into this trade and Disney's at 116 or higher by your August 17th expo, you're going to make a 614% return. Now, since it's out of the money and Disney has to climb by $3.31 to get there, you know, that's why it's a cheaper option. And that's why on vice versa, the in the money spread was more expensive than one like the 112, 113. The further out of the money you go, the cheaper an option becomes because there's a lower probability of the stock hitting that price by that expiration date. So you have to understand, just because an option is cheaper, it doesn't mean that it's a better trade or one that you should enter. It just means it's higher risk. The stock needs a higher move to get to that point. And that's why it's important, like I said, to drop your charts so you know where the probabilities are or where that stock might be heading to. And as you see here, it only took 1, 2, 3 days for it to go from almost 118 a share all the way down to 112.50 a share. So it had quite a significant move. It moved 6 points in just a matter of 3 days. So do you think Disney could climb 3 points, or like I said, just $3.31 from now until Friday? If you do, you could enter into a trade like this and make a 614%. But the key to trading is finding high probability and lower risk trades to grow your account. So let me show you some more examples here. So this is just, and this here for me would be a stock trading within a range here. for Disney or within a channel, which we'll go over in a second here. So we went over the range bound, or one of the patterns that I look for, stocks within support resistance areas or ones that are trading within a channel. Let's do one more example of a channel. So here was one on CRM. Let me zoom this in a little bit. So as you guys see here, this was on July 13th. I said, guys, if you're looking at this channel going back almost 2 years ago, Salesforce has been trading within this range, within this green channel for quite some time. I told them it just got up to a high of around 150 a share. I said, we're probably going to see some type of pullback, some profit taking here. I said, in the long term, I feel CRM, Salesforce, is going higher, but in the short term, it's going to go lower. How did I know that? Well, we could see here by the RSI, the MACD, and it broke out of this channel, and it's time for it to retrace and see some profit taking. So if you're just following your tools, your indicators on these charts, and you're drawing up your charts like I have, it's very easy to predict what a stock may do. So like I said, this is a Salesforce chart on 7/13. Now let's show you the chart the next day, or a few days later. So that was on 7/13. Look at what the stock did after that. So here was when I posted that chart that you guys just seen on this day right here. And then the stock ended up pulling back to around 137. Let me see on the big chart here. So as you see on this chart that I just had up, this was at 147.26 when I said, guys, it's going to start heading back. We have an overbought RSI. The crossover in the MACD, it's got a big gap there. We're going to see a reversal here, and she's going to come down, and we're going to see some profit taking a little bit. That was at 147.26, and as you see, that was on one of these 2 days right here. On the 16th, I said the chart was on the chart saved. So the 16th was right here, and as you see, a few days later, then she went from that 147.26, and she dropped all the way down to around 135-ish. And if you're looking here, it's been holding up on the 50-day SMA pretty well. So I actually told the members we got into a trade, which I could show you guys quick here. This is the trade feed on our website. So I post all the trades here and chart analysis, but let me show you the trade we made on CRM. So here's the trade alert I just sent out on CRM 5 days ago. We bought the 144, 145 vertical call spread for this week's expo. You see the expiration date here, August 17th. We got this trade for 50 cents for it to be worth a max of $1. So this trade right here can make 100% return, and all we need is the stock to be above 145 by this Friday. So above 145 a share by this Friday, this trade here is going to make a 100% return. Okay, so like I said, I'm going over this with you guys so you know how to draw up your charts, you know what to look for before you start entering into a trade. Because it all comes down to risk management, trade management, having a trading plan, and being disciplined enough to follow that plan. So now, what is a vertical spread, Dave? A vertical spread is just what I showed you, buying, like I said right here. So on Salesforce, for example, Salesforce also has earnings a week from tomorrow. So I do think Salesforce is going to have a great quarter, but I got this particular trade. A, it's monthly expo, and B, I didn't want to go into an earnings with high volatility stock like CRM. So, for example, Dave, you just asked what a vertical spread is. So this is all it is, Dave, is let's say you're buying we'll do it again on this one, the August 17th. Let's do an in-the-money spread here. So let's say we buy the 144, sell the 145. You could do this for 66 cents a contract right now. So the max this could be worth, like I said, is the difference between your two strikes. So the difference between 144 and 145 is $1. So you're paying 66 cents or $66 for it to be worth $1 or $100 per contract. So like I said, it's simple. Don't overcomplicate things. You're paying $66 for this spread. As long as it's above 145, it's going to be worth $100. So you're making $34 net gain per contract. So if you got 10 contracts, it's going to cost you $660 to be worth $1,000. Okay, so like I said, basically all the spread is, Dave, is you're buying a stock for 144 and someone is paying you the right to take those shares off you for 145. So you bought the stock at 144 and some guy comes along and says, hey, I'm going to give you $1 per contract for me to have the right of your shares that you got at 144. I'm paying you the right to have them at 145. So that's all it is. Here, Dave bought it for 144. You're selling it to someone else for 145. It's that simple. Don't overcomplicate things. Okay, so like I said here, now let's go a little bit further out of the money. Let's do the 145 and 146 spread. As you see here, that only costs 54 cents a contract. Max it could be worth is $1. So $1, divide that by 0.54. If you got this spread, its max return is 85%. Okay, so that's not too bad. Now let me go over a few more examples here. So this is another example of just like Priceline. So like I said, guys, this is important. I have three major types of chart patterns. They're the only types of stocks I look to trade. I don't worry about anything else. If they don't meet one of those three criteria, I dump it off and wait for the next trade or the next setup or the next chart. So that one is the one trading within a range, a channel, or support and resistance areas, just like CRM here and just like booking. So if you guys are taking notes, if it's within a channel or if it's within support resistance, just like booking, and you could easily pick calls and puts based on if it's above that resistance area or down near that support area. Down near support, you can make some calls. Once it gets up to that resistance area, then you can buy some puts and profit on the drop. Okay, so that's one type of chart I look for. Next one are hook patterns. And this is my favorite type to trade. Also, momentum and breakout is, but lately, hook patterns have been doing us extremely well. So let's take an example of a hook pattern. So hook pattern, like I said, the ABBV example. I'm going to bring that up on here. Okay, so as you can see, this chart over to the left is ABBV on July 24th. This was at $90.49. And like I said, guys, let's get some regular calls on this, and let's have a target area of $95 to $100 a share. So that's on the left here, and that was on July 24th. And if you look at the chart over on the right here, that was the 24th here at 90.24. I think I said 90.48 or 49. So it went from 90.48 all the way up, and it broke our 95 target and even went much higher than that and got all the way up to around 98.50. So that's your usually when I have a range bound like this, a target profit area that's this wide, what I'll usually do if I still think the stock has momentum, the first time it breaks that first target area, like I said, 95, I'll take half of my trade off at 95, and then as it climbs, I'll take additional portions of that trade off the table and lock in the profits. So that's just one example of a hook pattern here. Okay, it's this simple. Let's just put that across. So if you see this down here and you see ABBV had that big drop, it formed a base. A base is a few days that it's not making any new lows. It's kind of flat and it's starting to form that hook pattern. Okay, and then on the next day you see you have a full-blown hook pattern here. You see that hook right here from the drop from 97 all the way down to what is that 86, and then it started to rebound. Who's ever on the phone, please mute that. All right, so then she started getting back up to that 95-100 target area. Okay, so that's just one example there. Let's take a look at the next one here, ACAM. So I sent this alert out to members. This is actually one that I posted in Day Trading Stock and Options Room as well. So this was on 8/1. I think this was a Sunday. Let me see here. No, that was on a Wednesday. Okay, so that's not one that I included. It might have been, but you could check in the trading room and see. But I told members here it got to, try to zoom in a little bit here. Okay, got all the way down to 70.29 a share. Let me zoom in a little bit. So as you see here, ACAM, it got all the way down to 70.29 a share after just being above $81, $82 a share the previous 3 days. So it went from 82, 81 a share all the way down to 70.29. I said, guys, it's down to support, which if you look here, going all the way back to, if you could see my mouse, here's one support it dropped to and bounced back. And down here, it was just laying flat on the support line here, and then it gradually went higher after that. So I said, guys, she got down to support here. I could expect to see either some buyers stepping in, stock taking off, or a hook pattern forming here, or at least some type of base and support at this area at $70 a share. So if we look here, that was on August 1st. And then if we look at the chart here, ACAM, you see, here's that big drop I was telling you guys about at 70.29 a share. And what happened then? She quickly rebounded, filled in that large gap that you've seen down. And that's what we look for on hook patterns. We look for it to fill at least half of that drop. So if she dropped from $80 down to 70, we're looking for at least 75, a midline between that hook, that shaft of that hook. We're looking for the midline to start to take profits on a hook pattern setup. So that was a great hook pattern, got up to the target and higher, and that's the beauty of hook patterns. Let's take another look at another hook pattern. And you're going to see consistencies if you start looking at your watch list and see whenever any of those stocks that you watch have a big drop like that. And I'm not talking about a little, if you're looking at this chart here, like this right here from May 24th down to May 31st. That's not a hook. A hook pattern, like I said, it has to have the characteristics of a large drop within a couple of days or overnight, and then it forms the base. And once it forms that base and you get confirmation the next day that it's taken off of that base, that's the time to enter into a hook pattern. And like I said, your target should be the midpoint between that shaft where she dropped from. So like I said on here, back up to $82 down to 70, that's about a 5-6 points. So from between 70 to 82, that's around 6. So around 75, 76, that's your target profit area. And if you're just buying some regular calls, if it was an earnings that she dropped on, your IV, your implied volatility is going to drop. It had a huge IV crush, so the options are going to be much cheaper. And if you got into those calls at that base, and then like I sold in the middle of the shaft, you're going to make a large profit on that. So let's take another look at another type of hook pattern here. Let's see what this one is. Okay, so let's go over. That's the second type. So we have the range-bound, channel-bound type of patterns that I like to trade. Then we have the hook patterns. If you're numbering them, first is hook, second is momentum breakout, and then the third is the range-bound. So we just went over the hook patterns. Now let's talk about breakout and momentum stocks. And I'm going to share with you guys, if you haven't seen my video on YouTube, you got to check it out. I made a great video on how to trade breakout stocks. Last year, around the same time, we ended up getting over 300 members in the month of July to August. Obviously, the markets were doing fantastic. We had a huge breakout in the markets, and we were just making trade after trade with 200% plus returns. And if you look, these are the stocks that make those large percent returns. So let's take a look here. Guys, whoever has that music on the background, please mute that. Guys, hold on till the end to start looking at charts here. Let me get some things up. All right, let's just put Amazon on here. I gotta find that Amazon chart I just had here. All right, here's the Amazon. So here is the chart on Amazon from August 2nd that I shared in the trade room. Let's take a look, zoom in this little bit here. And as you see here, here's a breakout, for example. For a breakout, when I look at the weekly, I'll answer your questions at the end, guys. I can't see them. They pop up so quick. So here is an example of a breakout stock. When we're using our SMAs, let's take a look at Amazon, for example. So if we're looking at Amazon here, you could either use your 10 or your 20-day for breakout. Let me get rid of these lines here, support, resistance areas on Amazon. Let's just look at the SMAs here. So an SMA, perfect example, is right back here. When the stock clearly closes above all 3 or 4 of the SMAs, and then your entry point is the first day you have a clear candle closing above the SMAs. So for example, right here on May 24th, you got an entry signal. The stock closed above all the SMAs. The stock's at about 1,600 a share here. And your breakout or your momentum trades, when you're entering into these types of trades, like I said, I shared with you how to trade the hook patterns. I shared with you how to trade the other pattern, the range-bound or channel-bound the charts that I like. And then, like I said, here's the third one. These are the breakout momentum, and here's how to trade those. So to trade a breakout momentum stock, what you're looking for is the first day the stock closes above the SMAs. So like I said, right here, $1,600 a share, you got your entry into Amazon. Okay. Now, when you're closing a breakout or momentum trade, the first day you're going to close it is, it depends on what the stock's doing, but it could be the first day it drops below the 10-day or the first close below the 10-day. So if it just touches and drops below the 10-day, you could say, okay, she's getting weak here. I'm going to lock in my profits here. Or you could wait until the day it actually closes below the 10-day SMA. So like I said, you got in here at $1,600 a share. You didn't get a sell signal until June 22nd when the stock's at $17.20 a share. So 120 point move higher. That's almost a 9% move higher. And with options, that's a huge profit. Let's take a look, for example, if you're looking at regular calls on this. So if you got in here at May 24th to June 22nd, that's about 1 month, okay? So in 1 month, it made that 120 point or 9% move higher. So let's take a look at Amazon, and just so you could figure out what type of gain you're going to be looking at, let's use the September 21st Expo. So if you're just buying the regular calls here, we'll do an at the money for September 21st, and we'll use let's do the 1890. Okay, so this is going to cost you around let's just say $55. It's going to be $55.25. But like I said, there's 100 shares per contract here, so you're going to have to multiply that by 100. So one single contract of Amazon is going to cost you $5,525. But you're controlling 100 shares. So if you bought 100 shares of Amazon, it's going to cost you about $190,000. But you're having control over 100 shares for only $5,525, and you have the September 21st Expo. So let's, like I said, in that chart in back of us we just went over where it had a 9% move in just less than a month. Let's say it does that right now, from now until September 21st, and we bought this call. I want you to see the type of gain you're going to be looking to have. So 1890. So if the stock goes up 9%, that means the stock's going to be around 2060 a share. So 2060 a share, and you bought the 1890 strike. So that means 2060 minus 1890. That means this is going to be worth $170 per contract. So you paid $55.25. And you should always have notebooks with you during the day, because we're going to also go through the routine here that you should be doing daily. So if that's worth $170 per contract, 170 divide that by 55.25, you're looking at a 207% return. Okay, but if that happens, let's say within the next week or two, you're going to be looking closer to a 300, 400, 500% return, because you still have time value known as extrinsic value built into this premium. Okay, so let's say now you say, Dave, you know what, I think Amazon's going to have that 9% move over the course of the next month and 8 days here, 9 days, but I don't want to go with the calls. They're expensive. Let me do a spread. Okay, so if you're going to go out with September monthly, which you still have over a month until expiration, let's take a look at that, what that's going to look like. So like I said, if you felt that the stock was going to go up to that 2060 area, let's say you got the 2040, 2050 vertical bull call spread, and let's see what that's going to be worth. Here's what's amazing. So look at this now on the option chain. So if you're buying the 2040 strike call and you're selling the 2050 strike call, like I said, the most it could be worth is the difference between the two strikes. So the most this could be worth is $10 a contract. Okay? This contract right here, this spread, only cost $1.23. Okay? So 10, divide that by 1.23. You're looking at a max net return here of 713%, as long as Amazon's 2050 a share or higher by September 21st. Okay, so that's an enormous gain, 713%, and you only need the stock above 2050 a share. Like I said, now the further out of the money you go, the higher the risk. I wouldn't suggest this, but I was just sharing with you guys how if you feel the stock's going to make a certain move by using your support, your resistance areas, and using your SMAs and any other types of indicators you're going to use, that's what's going to help you determine where you feel that stock's going to go, where it might pull back to, where you're going to take your profits, and where you're going to cut your losses at. So like I said, you got into a spread like this. you're looking at a massive return of 713%. Let's say now you want a more conservative trade. You say, you know what, Dave, I'm going to use stock options as a replacement to buying shares. Now, that's very common. That's a practice that I use on my larger accounts. And so what you're going to do in a situation like that is, you see Amazon right now is trading at $1,887.80 a share. So let's say we buy the, let's say the 1875, 1880. Let's see what that's going for. So here's a great example of a low risk, fully in the money spread that Amazon could even drop $7.80 and you're still going to make a max return. So as you see down here, the midpoint's $2.72. Let's round that up. Say it's $2.73. So it's going to cost you $273 for this spread. The max it could be worth is the difference between the two strikes. So 1875 to 1880, it's worth $5 max. You're paying $2.73. So that's a max net gain of 5. Divide that by 2.73. That's a max gain of 83%. And like I said, you have plenty of time. This is a September 21st expo. You have over a month and 9 days until expiration. The stock could drop $7.80 and you still have that 83% return. It could stay where it's at. You still have that same 83% return, or it could go higher. It could go to $2,200 a share. You're still going to make that 83% max return, because with the spread, you're capping your profit since you're selling the right to someone at that sell to open. So as the stock goes higher, you're going to see your buy to open is going to be worth more. You're going to have a profit on that contract. So your 1875, if Amazon climbs 30 points tomorrow, you're going to see that you have a profit on the 1875 strike, but since you sold someone the right to 1880, you're going to see that strike have a loss. But you have to understand that the 1875 strike is going to have a greater gain than the loss you're going to see on the 1880. So, for example, you might see a $2,500 gain on the 1875, and you only see a $1,000 loss on the 1880. So, realistically, you have a net profit of $1,500. Since you're selling someone that strike, you're selling to open, as the stock goes higher, you're going to see a gain on the buy to open and a loss on the sell to open. So perfect example here is right here. Here's an actual trade from July 26th. Let's take a look. So at booking, this is actually the trade we closed out that I shared with you guys before. So we bought the 2035 strike calls, and I had 154% gain on those. I made a I made a gain of over $11,000. Now here's the spread, and I want you guys to understand this. So booking went higher, and as you see, the strike that I bought to open has a gain of 138.57%. And the leg that I sold, which you could see here, this is plus 25, this is minus 25. It's minus 25 because I sold someone the right to the 2075 strike. Okay, so I bought it at 2072.50, and I'm selling it to someone for 2075. So as the stock goes higher, as booking goes higher, that 25, those 25 plus 25 you see here for the 2072.50, that has a gain of $27,734.61. And like I said, as the stock goes higher, your short leg, the one that you sold, is going to have a loss. And people all the time ask me, oh, Dave, why do you have such a big loss? It's not actually a loss because this is one trade here. The 2072.50, 2075, that's one trade. That's a vertical bull call spread. Okay? So in this case, I only need a booking above 2075 to make that max gain. And then I'd be left with the profit. So as you see here, as your spread goes higher, your total gain for the long leg is greater than the loss on the short leg. And that's how a spread or a vertical bull spread or any type of vertical spread should look like. If this was a put spread, as the stock goes lower, your long put is going to be worth a greater amount than your short put is losing. So that's how spreads work, and it's very important that you understand that. Okay, so those are the three types of chart patterns that I trade. Like I said, you have your hook patterns, you have your breakout momentum, and then you have your range bound. Okay, you should not be trading anything else. The rest is garbage. For example, let me go over some of the other charts I have down here saved. Okay, that was the Amazon. Let's get rid of that one. Here is AutoZone. So as you see here, this is a chart that I shared in the trade room, and I actually sent out an alert on this. And this is actually one I also shared in the main Facebook group, Day Trading Stock and Options Room. I said, guys, it just got upgraded on August 1st, and that's something that we're going to talk about too, a daily routine. You need to check your upgrades, downgrades, and top initiations every single day. And it's easy. You go through that list of upgrades, downgrades. You check out their charts quick every single day. And all you're asking yourself while you're checking those charts, do any of these charts meet my criteria of any of these three chart patterns? If it has a hook pattern, if it has a breakout momentum, or if it's range bound, that's a stock that I'm going to add to my watch list and be looking. I'll draw up my charts just like you see on all the charts I shared with you. I'll put the SMAs, I'll put the support resistance areas, I'll put my profit target areas, and I'll also put on there my stop areas. And that's how you need to draw up your chart. But like I said, going back to that routine, you should always be looking at your daily upgrades, downgrades, top initiations, scan through all those stocks on that list that day, and see if any of those on that upgrade, downgrade, initiation list meet any of your three criteria that you look for to trade: hook out or hook pattern, breakout momentum, or range bound. Then you add it to your watch list, and you're going to start to watch that stock more aggressively and see if there's any entry or exit points there to make a trade. Okay, so on August 1st, I shared this in the chat room, the trade room, sent an email alert out to members, and I posted it in the Facebook group. I said, guys, it's just got an upgrade. I think it's a great long-term trade idea. You can use the blue 20-day or the red 50-day SMA as your stop points. I said I have a target between $750 and $800 a share. And as you see here, the stock was only at 702.16. Okay, and this was on August 1st. Let's take a look at what AutoZone's at now. AZO, look at this. It's at around 740 a share. So how did we know that she was going higher? Let me bring this one over again. Okay, so over here, like I said, this was on August 1st when it got the upgrade. It was at 702.16 a share. So as you see, August 1st over here, this is right here. This is the day that we seen it, August 1st. What happened the next day? The next day we see a engulfing bullish candle here, totally engulfed the previous day, and it bounced higher. We had a breakout above all the SMAs, and we still have a breakout. Now, if you're in this trade now, if we entered into that trade back on August 1st, where am I going to be looking at for an exit? Well, we could see we have the next resistance. We actually had some type of resistance at around 720 to 725 a share. And like I said, that chart that I just shared with you guys, she was only at 702 a share. So if we got calls, if we got a spread, and it reports earnings on the 17th, September 17th. So you always have to, before entering into a trade, that should be another routine. Check out the calendar, make sure there's no dividends, there's no earnings coming up, there's no stock splits, or any type of news that could affect your trade. It's extremely important. So like I said, August 1st, sent out that alert, said, hey, here's a good long-term trade. Like I said, if we wanted to pick an exit point out there, we could have picked anywhere from 720 to 725. Our next area of resistance here is going to be around 740, and then we have another one at around 750. So between 740 and 750 a share is when I'd take a profit. If you wanted, like I said, I still think this is going to run higher up to earnings. You could get an in-the-money spread, so she's currently at 738.96 a share. So let's take a look. If you still like this stock, you could type in AZO, and you could go, let's say, hey, yeah, let's try this week's expo. So let's use the August 17th monthly expo since there's more volume and open interest on those. Let's get an in-the-money spread and see what that costs. So if we bought the 735 strike, sold the 737.50, it's going to cost us, sometime these are out of whack here, just like this one is. Buy to open, sold to open, call, 735. All right, let's try a different strike here. 737.50, 740. It's not giving me the accurate prices for these. Let me see the 735, 740. E-Trade decided not to update the charts here. That's still not right. All right, so we won't go over that example. E-Trade, the option chain there is not right. But like I said here, we got this trade just based off going through the upgrades, downgrades, initiations. That's how I found AutoZone. AutoZone's not a normal stock that I normally trade. But you know what? On August 1st, I didn't have much going on. The market might have been slow. And I said, you know what, guys, let's check out the upgrades, downgrades, initiations, see if there's anything on there that catches our eye. And AutoZone was one of them. And like I said, here was August 1st. And then the next day at 7:02:90, that's when I sent out that alert. And she climbed all the way up to 740. So that's a huge gain there. And those are the types of trades you could look for, low risk, high probability trade setups to make a quick 50 to a 90% return just by doing in-the-money calls or spreads. So now let's take a look at, all right, so here is Baidu. I had a lot of members asking me about Baidu. Zoom this in a little bit. So if we're looking at Baidu, I told members a few days before this, I said, guys, 225 support number 1 and 215 is support number 2. She blew below 225, and here's the sad part, okay? I had a lot of people messaging me when she was above 225, just broke below that support number 1. They were saying, Dave, I want to exit Baidu now. They said, I think it's oversold. And you know, if you're looking down here at the RSI, you can see it's hanging right around 30. Normal RSI is 80 and 20. I changed mine to 70 and 30 just to get a little bit more action, a little bit more targets, entry and exits. So like I said, a few people were asking me about entering into some calls on Baidu. I said, why would you enter into a call on a stock that just dropped major support and is heading down to that next support number 2 at 215 a share? You don't want to try to catch a falling knife when you're trading options because, you know, you have your deltas, your thetas, and with options, you know, a 2% drop on Baidu, if you have the shares, it's only 2% drop. But if you're buying calls and Baidu drops 2%, you could be looking at a 50 to a 70% loss just from that 2% drop. So, you know, you really want to have precise entry and targets when you're looking at a stock like this, especially one that's falling and dropping below major support. So I wouldn't look to enter Baidu until I seen it. If she got down to 215 a share, which is support number 2, and then she bottoms out and you see it struggling to drop below that 215, then I'd say, okay, the next day she has a green candle and is higher than the previous day's high. That would be my entry point into Baidu, is looking for a closing high higher than the previous day's candle high. So that's very important. We could go over the logistics of all that in another video, but you know, it's very important to, like I said, if you see a stock just dropping below major support, you don't want to try to catch a falling knife, and you don't want to try to go long on a stock that's still dropping. Like they say, the trend is your friend, and it's the same thing with stock options. If the stock's trending lower, you really don't want to buy it until you see a reversal. And you want to get confirmation of a trend reversal before you enter into a trade as well. And that's why on this chart here, I have the 5-day. The white line you see right here, that's a shorter term lagging indicator, the SMA, the 5-day. So if I see Baidu cross the 5-day SMA, like I said, it's a lagging indicator, but it's a 5-day, previous 5 candles, then I might have an entry point once she crosses and closes above the 5-day white SMA. So that's a great entry there into a stock. Once you see she's bottomed out at support, you get that confirmation the next day, the candlestick higher than the previous day's high, you can enter into that stock and then place your trade. And then, like I said, you're going to have to decide what type of trade you want. A perfect example of a good trade like this would be on Baidu. The chart just went because I was out of the back here, but let's get Baidu up here because I want you guys to see something. Okay, so look at that. That was the other day too. What did I tell you? She got down to that 215. I shared a picture on here from August 7th. So on August 9th and 10th, she went even lower. So she did get down to that 215. Now if Baidu bounces, here is the perfect type of trade setup for a stock that gets down to that support area and then bounces above. So if you see Baidu just got down to that 215 a share, she's at 220.44 a share right now, what you want to do is get a spread that's below that support since it's fully in the money. And like I said, you have major support there. So let's see, for an example, let's go with the September 21st Expo. Now, since we have a trade war going on with China and all that, you know, I wouldn't necessarily get into Chinese stocks just yet, but I'm just sharing this as an example with you guys. So let's say we bought the 210, 220 vertical call spread. This is going to cost $5.95 to be worth a max of 10. So 10, divide that by 5.95. This is a max net gain of 68%. Nice thing about this is your break-even point is right around that major support number 2. So as long as she doesn't drop below that major support area, you're still going to have some type of gain on this trade. Your max gain is Baidu above 220 a share. And anything above that, like I said, your max gain is 68%. Now, if you win out of the money, let's say we use the 225 as that's the next resistance now. It was old support, now it's going to be resistance. So let's say we bought the, let's say the 230, 240. And that's actually going to be resistance number 2 is at 240. So you could get that spread for $2.38 to be worth 10. So 10, divide that by 2.38. That's a max net return of 320%. But like I said, that's a higher risk trade. Your low risk trade is buying the 210, 220 vertical call spread for September 21st or even August 17th. You know, let's see what it costs for August 17th. This is actually a pretty decent trade. Let's say we got the let's say the 1250, 215. So it's going to cost $195 to be worth $250. You know, I don't really go for trades that can make me anything less than 50%. My trades have to make me a minimum of 50% for me to enter. unless it's a larger trade that's a stock replacement. So 2.5, divide that by 1.95, you're looking at a max net gain here of 28%. So you're making a 28% return as long as the stock's above 215. She's $5.44 above that right now. So even if Baidu dropped $5, you're still having a max gain here of 28%. So that's not bad. All right, let's go over. I think I only got a couple more charts here. Okay, that was Baidu. Okay, here's another one, guys. This is an important one. So here is Walgreens, WBA. So as you see here on the top of this chart, I sent this out July 5th. And I told members, I said, guys, we have a great hook pattern forming here. It's already, like I said, you look for the drop point, the high, the past previous few days. So that was around, let's just say, $69 a share. She dropped down to around 60 a share. So around 64, 65 is going to be your midpoint of your shaft that you're going to be looking to take profits. So around $65 a share, that's when I would look to take profits on this trade. Like I said, I shared all these pictures I'm sharing with you. They're saved on my computer because I have to save my pictures to input them into the trade room. So all these are pictures I've shared in the trade room. And like I said, so you see here, so July 5th, she was at 61.90 a share. And I said, guys, it's a good hook pattern here. We could look around 65 to take some profits. Let's take a look at what she did then. So this is on the 5th. Now here's the other chart. Here is on the 18th. So just 13 days later, less than 2 weeks, look at here. So as you see, this chart over on the right is back when she was right here. So the 3, 4, 5th candle. So right here is when we said, here's a good entry at 61.90 a share. So she went from 61.90 a share all the way up to, let's zoom this one in a little bit here, all the way up to 66.13. Like I told you when I first brought that chart up, the midpoint of that shaft was between 65 and 66. So it reached our target. If you got calls, you're making anywhere between this is a blue chip stock. It's not as volatile. So you're looking anywhere between a 300 and 500% return with regular calls here, possibly even more. So this stock had over a 10% move off of its lows when it formed that baseline of that hook pattern. So it went up 10% in just a matter of about 10 days. So from 10 days, it went up 10% following that hook pattern. That's why hook patterns are so powerful, and they're one of my favorite types of charts and patterns to trade, because you typically get a big response, and a lot of buyers are usually stepping in after a big drop like that. They think the stock is oversold, it's undervalued now, so you start seeing some hedge funds, mutual funds, institutions starting to accumulate that stock, causing it to rise rapidly. So that's a great type of hook pattern here. And like I said, if you're looking at any of the charts on your watch list and you see a hook pattern forming, keep an eye on it, because they're usually the highest yielding trades that you can make. So let's see what else I got here. Here was an old trade on ExxonMobil, another hook pattern. So as you see, this one's actually a little bit older. This is going all the way back to February, the end of February. I don't know the date on here, but let's zoom in a little bit. So as you see, ExxonMobil back in February 14, 15. So this is towards the end of February, February 20-some. Let's take a look at what she did. And like I said, I'm showing you this to show you the value of hook patterns. So here's that big drop, right? If you're looking at this chart here, right around here is when I said is a good entry point. Let me get this chart back up. So we're comparing them side by side here. As you see, here's the big drop on the left. Here's the big drop on the left over here. Okay? And what happened? She immediately got back up to from 77.54. As you see on this chart, I said resistance is around $80 a share. And this is before I knew anything. This is the chart on the left is the day I took this chart. There's no other candlesticks ahead of it. This is that day as it was going. So, and actually, if you look, I posted this in the day trading stock and options room as well. I said we have a MACD forming crossover here. We have a rising RSI after being oversold, and we also have a hook pattern. So right here you have 3 check marks. You have 3 huge confirmations that this stock is ready to rebound and ready to go higher. So at 75, it formed that baseline of the hook pattern, and here it was at 77.54. And if you see on this chart to the left here, I said we have resistance around $80 a share. Look over here on the right now where this stock got up to. It got up to right below $80 a share. It got up to 79.89 a share, and then it pulled back. And you're going to see that if you do your charts correctly, you're going to see the stocks struggle with that resistance area. But once it does break that resistance, then it's usually off to the next resistance area. So like I said, I always mark my resistance and my support areas, and those are sometimes my targets of when I'm going to take profits, and the support areas and the SMAs are what I use to set my stop loss areas. So it's extremely important, like I said, to always have your support, resistance areas. And here's another great example, guys. When you make a channel like this, look at this channel I made on ExxonMobil months ago, okay? When it's following this channel, like I said, when she's just like the booking, all right? I told you guys my 3 patterns, hook patterns, momentum breakout, and range bound, okay? Or trading between support and resistance. So here's a channel. This is just like the third one, like booking. This is range bound. This is between support and resistance. So as you trade ExxonMobil in this channel, you're trading calls on the bottom part of this channel, and you're getting puts once it reaches the top. So you're getting calls down here, selling the calls for a big profit up here, then you're immediately buying some puts because she's at resistance of the outer channel there, and then you're selling your puts once she gets down to below the SMAs. There's many different types of scenarios where you could take your profits at, but let's say you took your profits, then you get calls. Same thing. You're selling your calls at the high here at the outer end of the channel. Then you're buying your puts again, selling your puts down here, getting into calls, made profits on your calls, got into the puts, made money on your puts, got into the calls, made money on your calls again, then you get the puts. And then your biggest thing, when she breaks, let's say she broke above this channel here. Let's say right here she broke out of this channel. Well, then you're going to say, hey, she's probably quickly going to get back up to that, $87 to $90 target area. So if she breaks out of that channel, that's very bullish, and you could go up to that next resistance area. Or if it's just that she's struggling with that outer band, like here, look at how she rode that band on that channel without breaking above it. Guys, whoever that is in the background, please keep the music down, the voice down. Put down the TV, please. Thank you. So like I said, once it breaks above that channel, you could get some calls, or you could sell your calls if you have them. And then once it breaks below that channel, that's time to buy puts and say, hey, this stock's not trading within this channel anymore. She was perfectly trading within this range. Now she broke out of this range, out of this channel. She broke below it. Now it's time to buy puts. or like I said, I have support. This is another great thing about putting your support and resistance areas on all of your charts. You know, you could see right now she's at major support right now, around $79.50 to $80 a share. You know, now if she breaks below $79.50, you damn well know that she's probably going to go down and retest that $77.50 area. You know, so these are why it's important to draw your SMAs, your support, your resistance for at least 2-3 moves out. And if you see a nice channel, draw a channel. You know, that's only going to help you. You know, like I said, this channel here, you could have been trading calls and puts this entire time, making, you know, triple digit, 100 to 300% returns from these lows to these highs each time. And it's really simple if you follow your charts and draw up your charts. Okay, so now what do you do? I'm going to make another, we're already an hour and a half in here, but a daily routine, guys, like I said, between 8:30 and 9:30, let's say 8:30 and 10 a.m., your upgrades, downgrades, and initiations are going to come out. You should always check that every day. Make the daily routine. You're checking that. Also, another thing you want to look at, here's the most largest percent stock gainers for the NYSE. I have another one for the NASDAQ and another one for the other markets. So in the pre-market hours, you could be looking at this and saying, hey, MD Medley Management is up 62.86% in pre-market. And if you want to make some quick day trades in the pre-market hours, this is the time to do that. You're watching these watch lists here. This isn't a watch list. This is a scan right here. But you're watching these scans to see, hey, what's quickly shooting higher in the pre-market hours. If you see something that's aggressively moving higher here in pre-market hours, that's going to be something you want to take a look at, possibly make a quick day trade in the pre-market hours, because you could trade pre-market hours at 7 a.m. I don't know if you guys know that, but if you're buying shares, you could start buying at 7 o'clock in the morning and selling, 2 minutes later if you want. So in the pre-market hours, you're going to see large movers, and you want to take a look at those. So that's one thing. The largest percent gainers, and you could also change this to largest percent losers. I could change this from the NYSE to the NASDAQ. And like I said, there's a lot of things I'm doing from early in the morning, 6, 7 o'clock in the morning, all the way up until opening bell. And then, like I said, between 8:30 to 10 o'clock, you're going to get your upgrades, downgrades, initiations, and they're going to look like this. I always send these out to members. And this is what I send. It's going to look like this. So here, I send email alerts out to my members. I say, hey guys, here's the top initiations, downgrades, upgrades, and then I also send the unusual options activity out for that day. I send the stocks and ETF UOA, which is unusual option activity, out to members each morning. These, you see, it came out 9:08 in the morning. So, what you do is you quickly scan through the charts on these. HURN, SRPT, that's actually one of them we, talked about that had a great setup. Pizza was another one we said had a great setup, but then it had earnings, and it had horrible earnings. But you shouldn't be in a trade for earnings anyway. It's too high risk, too much volatility, and it's not good for account management. But anyway, like I said, guys, so I'm always sending out the top upgrades, downgrades, initiations, UOA to members. And then if I see charts off of those, I'll send those out to members. I'll give them trade ideas to make on some of those charts. Like here I said, this one's, holding the 50-day SMA here. Let's watch, see if we get confirmation. SRPT, that's one that took off and away. And there is the pizza there one. Here was the Amazon. This was a spread that we made, got to 1832.15, 1835. We made a quick 86.15% gain on that in just a matter of a couple of days. Here's another one, Facebook. Guys, here was when we entered Facebook, okay? So Facebook, on here we got the spread. We got the in the money. If you see the one I went over here, 170 and 175. That was fully in the money spread. We got for 470 or 335 a contract. We could have let that expire for max gain, but what we actually did was took the profit on this of 40.3%, and then we bought some calls and made some day trades that made over 130% return. Day trades do not go out as alerts. They're only for the trade room because we could be in and out of those really quick, and there's not time to send up an email and text alert for those. But so as you see here, this is what we do. We send out emails, trades. Here's the other chart I want to go over with you guys quick. This is really important. Every single day, you guys should be looking at the Qs and Diamond ETF and see what's going on. So let's take a look here. Here's the Diamond ETF, as you see here from 7-9. So this is what I told members, and they're always surprised, how do you know this? And it's because I draw up my charts and I pay close attention to my charts.
No, Andy, no.
Guys, please keep that.
I'll get you in
shut
trouble.
That TV up, please.
No. You don't talk to Daddy like that. No.
All right, Daddy, please put your music down there. All righty, guys, so going back to this, if you're looking at this Diamond ETF, I said, guys, it has to get out of this range before we get into a trade with the markets, because the markets were so choppy here. All we were seeing was up, down the next day, and if you don't have volatility, you can't make trades. You know, volatility is your friend, especially with stock options or any type of trading. You want to see movement in the markets, and the more movement you see in the markets, the larger your gains, the larger your profits are going to be. So I said, guys, once we break out of here, she's going to go to that 248.50 resistance area. And like I said, look at this. This chart is from 7-9. So I said she's going to get up to 248.50. She might struggle there, but once she breaks above that, then she's going to 254 a share. And then I said she's going to go up to 262 a share next. That's, you know, in my next chart. But this ticker is DIA. So this is your Diamond ETF. This is the ETF that mimics the Dow. Whatever the Dow does, that's what this does. This is the ETF, electronic traded fund, that follows the Dow. Okay, so like I said, she's going to go up to 248.50. She breaks through that, she's going to 254. Well, like I said, this was a chart from 7-9 that I shared, so from July 9th. Now let's take a look at what she did. And this is the benefit of having your charts drawn up. I got rid of all my notes, I guess. I had notes on this, but look at, this is Disney, that's why. DIA, here we go. So this is the same chart that you guys just seen. I never change them. You know, they're the same thing from going back here to over there. Where did I put that chart? Here it is. All right, so here on the right, let me put this over here. We could. All right, so on the right is the live chart from right now, and then over here on the right, this is the chart from, as you see up here on the left, 7-9. So from July 9th, I said, guys, she's going to go from, what did I do here? Okay, so she's going to go from 246.42 up to 248.50 and then 254. And look at what happened. So here is where we were talking about. I shared that picture early morning, I guess, before she had to move up higher. So here's where she was at over here. And I said, guys, she's going to go higher. Look, we have the MACD crossover, the rising RSI, and we just broke out of major resistance. She's going to ride higher. What happened? Here was that day that I just shared with you guys, and look at that, straight up. She broke through that 248.50 resistance. She got up to the 254 resistance I have over here. She struggled a little bit, and then she broke out, and she wildly climbed higher. Now she got back down below that. So this is very important, guys. I want you guys to understand for this week, how do I know what's going to happen this week? Well, I could say to myself, let's take a look at the Diamond ETF. What happened the last trading day? So we could either say, hey, she held above the 20-day SMA, which is a great sign. So as you see over here, she really was holding above the 10-day SMA, that yellow line. So now I could say, hey, back over here on August 2nd, she got down to that 20 days. She bounced above it, and she climbed from there. So either A, if she breaks below this 20-day SMA, this blue line on Monday, then that's going to make me worry that she might get back down to around 250. You know, so she could possibly have a 300-point drop if she drops below this 20-day on Monday. And I don't care if intraday she drops below it. It's where she is at by the end of the day at close. So that's what I'm worried about. At 4 p.m., where is the Diamond ETF at? If it's above this blue line, the 20-day SMA, I'm gonna remain bullish and still think the markets are gonna climb. I could say, hey, she's probably gonna struggle a little bit at 254, but once she breaks above 254, she's clear sailing up to that 262 area next. So tomorrow and Tuesday are going to be really important in determining if the markets are going to continue to climb or if we're going to head lower and start to see more profit taking and some panicking coming in. Because all you're seeing in the news right now is about economic slowdown. You know, it's people just trying to worry you out and rattle you out of your positions. And you see a lot of that fear on Wall Street all the time. They try to put fear into the retail investors just to rattle them out of their trades, because option trading is a zero-sum game. For everything you buy, there's someone selling it, and it's usually the institutions, hedge funds, and mutual funds that are selling those options. So you're buying them, they're selling them. You know, obviously, if you lose, they win. If they lose, you're the winner. So, you know, that's what they're trying to do, rattle you out. So if we hold this and we're green on Monday, I'm very bullish and think we're going to try to get back up to that 257. So Dow 25,700 if we could bounce higher on Monday and Tuesday. If Monday comes around and we're down 200 points, I am definitely going to be bearish on the market and have to, you know, settle my positions and reconfigure some of my trades here. But for right now, I'm still bullish. So here's the Diamond ETF. This is something you should be watching every single day. Multiple times a day, you should be looking at this, referencing it, because whatever the Diamond's doing, that's what the stocks inside of the Dow are going to be doing. So if you see that the Dow is holding support here, then you can say, hey, she's holding her support. She's probably going to be bouncing higher than it since she's holding support so well. So now's the time I could buy some of the stocks in the Dow. Look at those specific charts on the stocks in the Dow that you like, and then separately find that support resistance areas. Like I said, it's a masterpiece you got to put together here, but if you follow it, it's very simple to predict what a stock may do. So that's the Diamond ETF. Let's take a look at the QQQ. This is the NASDAQ, okay? So whatever the NASDAQ does, that's going to reflect here. So as you see, I said we have resistance around 183 a share. We have major support at 177.50. And on your big ETFs, it's great to look at your 10, 20, and your 50-day SMAs as supports. So as you see, the Q, it really, you know, it has a doji here. That means it's indecision, doesn't know what's going to happen. So that's fine with me. She didn't cross or close below the 10 or 20-day SMA, which makes me still very bullish. If we're higher on Monday, I'm telling you, Qs are going to go back and retest that 183 area this week. Oh, shit, I just got rid of that there. Let me draw it again.
Louis.
So she's going to probably get back up to that 183 resistance area if we see a strong day on Monday. And then if she closes below that blue or yellow 20 or 10-day SMA, then I'm going to change my view and I'm going to be bearish on the market for that week. It's as simple as that. And here's the important thing, guys. Please lower your background noise or mute your mic. So like I said, if the Q's here, if that drops below the 10 or 20-day SMA, I could look and say, hey, what are the major stocks in the QQQ? They're your stocks. They're your big tech stocks like Amazon, Google, Facebook, Microsoft, Apple, okay? So those are the stocks that if the Q's drop below this support area, the 10 or 20-day SMA, then I could say, hey, you know what? Amazon had a huge run. It climbed over 140 points in the past 8 trading days. That's going to be one of the stocks that has the biggest retracement, and you're going to see the most profit taking on a stock that ran 140, 150 points in the last 8 trading days. So that's something to keep in mind. Like I said, I'm still bullish on this week. I think the markets are going higher. I specifically think tech stocks are going higher. So we'll see. I'm very bullish on Amazon, especially long term. I think that's going much higher. So let's take a look at that quick. Amazon's in complete breakout mode. Like I said, breakout mode, breakout momentum is when she's clearly above all the SMAs. You see back here, she went from 1,198 all the way up to 1,500. So she had a 400-point move here before you got that sell signal. So that could be what's happening right now. You see she's clearly above all the SMAs, and this is why it's so important to watch your charts, guys. Look at this huge break between the SMAs and where the stock is here, 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 and here. And that's what we're seeing right now, and it's only the beginning phase. So is Amazon, and see right here, here's the same thing. You had a big run, and then we've seen that little red candle. Big run, that little red candle. I'm not worried about that. A lot of members on Friday were saying, Dave, Amazon's going to drop to 1,700. I said, no, it's not. You got to watch and see. Now if we get confirmation tomorrow and she's lower, then it's possible. But even right here, look at, you had 3 red candles, still did not get below that 10-day SMA, which would be your stop area. Still didn't get below that, and then she started to climb again. So I'm not worried if she retraces for a couple days and sees some profit taking, especially after climbing from 1789 all the way up to 1950. 1915 minus, what did I say she was just down to? 1785. Amazon had a 130-point climb in 1, 2, 3, 4, 5, 6. 6 days. 6 days, 6 trading days, Amazon climbed 130 points. So like I said, it's fine if I see a little bit of profit taking happening over the next few days. That's okay with me. I'm still very bullish on Amazon and think she's going much higher. Amazon's a great stock, a great company, finally became profitable about a year or two ago, and she's just dominating the market and dominating the retail sector. So Amazon, I'm very bullish in. If you want to make some great vertical call spreads on Amazon, you could buy in the money spreads on Amazon and simply keep making that profit every month. If you had a trade, if you had one trade that was fully in the money and you said, hey, I'm going to put half of my account into that trade, and then, a month later that makes 100, let's just say an 85% return, and that you could do that on a monthly basis, just making that one trade per month, doing an in-the-money spread on a high, on a big stock like Amazon. That's only going to cost you, like I said, it depends on what spread you do, but it could only cost you a few $100s. So this is a great opportunity for those investors or traders that have smaller account sizes that are looking to rapidly grow their accounts by doing spreads in the money like that and trading stocks that you could determine the type of move a stock's going to have. Like I said, if you put in the work and actually look to see what a stock's going to do, like I said here with Facebook, you could ask any of the members at TSE, my subscription service. I said, guys, she's forming a hook pattern. This was at when she was around 172, 173 a share. And like I said, I posted it in the Facebook group as well. So there's proof there with the timestamp of when I said it. I said, guys, she's going to form a hook pattern here. She's going to get up to 185, and then either she's going to retrace or break above it and go to 190. What happened? She struggled a little bit. She broke above it, got up to around 188, and then she quickly pulled back and staying within this range now between 173 and 185. So this is going to be another great stock. Now here's some support right here around 180. So if Monday comes along and we see Facebook holding above 180, we could do a trade like the 177.50, 180 vertical call spread for either August monthly 17th expo, or we could go a month out to the September 21st monthly expo and create an a fully in the money vertical bull call spread on a stock like Facebook, and you could still make those massive returns of 80 to 120%, and the stock could stay where it's at. It could drop a bit or climb higher. Doesn't matter, but you're still going to make that gain since you're buying an in-the-money spread. All right, and like I said, it's important to drop your charts, see where they're at. Like here, Amazon was holding, or not Amazon, Facebook was holding the 10-day on Friday here. So that was a great opportunity, to see, what's going on here. And like I said, when you have hook patterns are the easiest charts to trade. It's very simple. So look out for those. And now I want to quickly, let me go back here. So like I said, here are the alerts we sent out. I do all my detailed charts for my members. I tell them, hey, we got into a Microsoft trade that's going to make a huge return this Friday. We only needed above 107 a share, and she's currently at 109.07 a share. So she's $2.07 fully in the money. We're going to have a big winner on Microsoft there. Here's the Salesforce trade we made. We bought the 144, sold the 145. This is going to make 100% return as long as CRM's above 145 on Friday. Here's a hook pattern trade we made on Zillow, the 50-51. Still very bullish on that, even though Zillow had a pretty shitty day on Friday, along with the market, though. But see, when you're looking at that, you could say, hey, the general market was down. It wasn't that particular stock. It wasn't that particular sector. It was the entire market. So we could go into trade management and all that at another day. But that's what you're looking for. But like I said, here's my website. That's the trade feed. If you want to go to your portfolio, you could see just the trades. This, like I said, here is the class tonight. I send out an alert to members saying when the class is and all that. So you're going to get a lot of great things if you become a member. Here's the trade room. I'm always posting day trades in here. Here was a hedge trade we got on Qs on Thursday night. On Thursday night, I told members we were likely going to see profit taking on Friday. So on Thursday, we got this 182, 181 vertical put spread, and we made a 357% gain on that put. And then as you see here on these 180.5s, I made like 60-some% on those. We ended up closing them for. So, the trade room is great. There's a lot of great members in there. During the trading day from 9:30 in the morning till 4 p.m., we usually have between 45 to 60 members in the trade room. So everyone's interacting with each other. It's great. There's a lot of things on there. So that's great for you guys. And then what I wanted to share, so here's what you get with Santarelli Exchange for those of you from the trade room or from the Facebook group that keep asking, what do I get with your service? You're going to get live trade alerts sent via email, text, and on the site's trade feed, as well as in the trade room. You get a live trade room with community of traders from 9 a.m. till 4 p.m. I'm usually in there a little bit earlier, 7:30, 8 o'clock. You get email updates of market news, unusual option activity, days movers, like I said, and the current trades. You get access to our live classes that are going to be held weekly. Day trades are only in the trade room from 9 a.m. Until 11 p.m. They're quick trades we may enter. They could be calls, they could be shares. You know, we've been doing a lot of day trading lately in the first 2 hours of the trading day. I'm in the trade room each day to help new traders answer any questions. So if you guys have any questions, go in the trade room and ask. I'm there all day, every day, and I'm there to help you guys. So please feel free to enter into the trade room and ask questions once you sign up. All right, and here's the promo code. A lot of people, because I closed out the previous promo codes. So if you want a free month, a totally free month, and you're not yet a member, you could use promo code NEWTRADER. You'll get 30 days free, and then you'll be billed normally, the normal price thereafter. Or if you want to take advantage of a year promo code, you could type in promo code NEWYEAR for the yearly subscription, and it only costs $13.99 for the year for 12 months of service. So you're saving quite a bit off the normal monthly price. So if you want, you could go to our website, thesantarelliexchange.com, sign up, use those promo codes, and we'll see you in the trade room tomorrow. Now let me see if there's any questions here in the chat room. Oh, there's a lot of messages here. Dave, yes, I have the alert service. Like I said, it's right here. Feel free to sign up all you want. There's the promo codes. And like I said, guys, if you're new to options, go in the trade room, sign up for the service, go into the trade room. I'd be glad to help you one-on-one. Or even do a screen sharing session like this with you privately. Price target on Zillow, Victor, like I said, above 51 a share by Friday. Zillow is going to be a great long-term hold. I think I might buy 10,000 shares of Zillow sometime this week and swing trade it or hold it for about a month. But Zillow is a good trade. What account size do you need to do an Amazon spread? Wade, to do a spread on Amazon, it's best to have, here, let me give you guys my thoughts and opinions on this right now. So if you're just starting out, this is extremely important. I actually wrote this down here for you guys. There's 2 great sites that you could paper trade, actually 3. You could go to cboe.com, you could go to howthemarketworks.com, or you could open up a TD Ameritrade account and you could virtually trade off there with live markets. TD Ameritrade is obviously the best because you're getting up-to-the-date instant information and live prices. So you could go there, start off with like a $5,000 or $10,000 account and see where you go over the next month or 60 or 90 days. When you see that you have a trade plan that's working, risk management that's working, trade management that's working, portfolio management that's working, that's all extremely important. Once you open up a virtual account and see that's going well and you're making profits in that, then I would then switch to a live account and start trading real money. But you should be in a paper or virtual trading account until you get the hang of it, until you know what you're doing. I get people that sign up for my service that don't even know how to place an order, and they're trying to make trades that I sent out, and they don't even know how to place the damn trade, and they're trying to make a trade on one of my alerts. So don't do that. Know what you're doing before you're trading, and know that you have a trading plan that's working and that you're disciplined enough to follow it to make profits before you start trading the live market. Okay, so like I said, paper trade until you feel comfortable. Once you feel comfortable, all you need is $2,000 in your account to start. You can make a living off of trading options with an account as little as $10,000, as long as you're disciplined and you're patient. You know, you could trade for a living, literally for a living, off $10,000. Obviously, it's not going to be a great living, you know, but you can make $2,000-$3,000 a month off of a $10,000 account pretty conservatively if you're patient and disciplined. So, you know, start off with, you know, $2,000 in your account. That trade on Amazon we went over, who was that asked about that? Wade. What size do you need to make that Amazon spread? All you need is, you know, $200 in your account, $125 in your account to make that spread. So if you're getting a $2.50 white spread and it costs $1.25, it's going to cost you $125, and the max it could be worth is $250 minus the cost of commissions and contracts. So it's pretty simple. Like I said, guys, control your mind. If you control your mind, your head, risk, trade plan, greed, don't overtrade. This is extremely important, guys. Don't overtrade. I see members in the trade room, I see members in the Facebook group all the time trying to make 10 trades a day. You trade the setups that you see. Like I said, there's 3 types of patterns that I trade: hook patterns, momentum breakout, and range bound. Those are the only 3 types of charts that I trade. If I see a stock that has that criteria, I'll trade it, and I'll usually make a large amount of money on those, large profits. And you have to have a profit target area and your stop loss area before you enter into a trade. Like I said, if you drop your charts like I drop mine, you're going to do extremely well, and you're going to see your profits and your account substantially go higher if you're doing simple things like drawing up your charts, putting your support resistance, your SMAs, your target profit areas, and your stop loss areas on that chart before you enter into the trade. You do that before you enter into the trade, you're going to see your account climb substantially, and you're going to do much better at trading. So that's really important. Like I said, don't overtrade. Quality trades are much more important than quantity of trades. Don't go saying, hey, I got to make $500 today. Trade the setups and charts when you see an opportunity. Don't try to chase something that's not there. And like I said, we can do another video on risk and trade management, building a trading plan that's unique to you and your individual needs. Everyone has different personalities, and you have to understand that. One person might be patient, the other person might be an aggressive trader, a short-term trader versus a long-term trader. So everyone is going to have their own unique trade plan, and it's got to be something that's tailored for you and fit for you, and that works for you most importantly. And let me see what other questions we have here. Guys, now's your time to ask some questions if you have. Dan, I'm new to this, so I will find that mute button for next time. Sorry for the interference. MMY, you asked hook patterns. How do you know the right side of the hook is going up and is not fake? Well, that's a good question, MMY, whoever you are. Hook patterns, they're not 100%. They don't work 100% of the time. That's why it's important to have your stop loss areas and your profit target areas. Because if that stock starts to go against you, you say, hey, it's a failed hook pattern. You're out of it. You might take a little loss, a 10-15% loss, but once you have that stop loss area and that goes against you and you don't see that hook pattern, filling in that gap and doing a normal hook pattern setup, and it fails that hook pattern setup, then you exit that trade, take that small loss, and you're off to the next trade. So it's not going to work all the time, but for me, from what I've seen, it works a good 80 to 90% of the time, the hook patterns. Go back on your stocks that you normally watch and see if you could locate a hook pattern and see what it does once it forms the base of that hook pattern, okay? And see where it goes. Like I said, on hook patterns, I look for it to climb back up to at least the middle of that shaft part of the hook. So that's my usual target on hook pattern trades. All right, guys, any other questions? Would you recommend doing a hook pattern on a rising stock to ride it back down, or one below the SMAs to continue on the downside move? I don't understand really what you're saying, Steve. On a hook pattern, I would not look to ride it back down. Absolutely not. You're looking to take that profit once it reaches that middle part of that shaft, because it could continue to climb after that. Like I said, a lot of hook patterns too. Like what I said, I'll take half of my profits once it gets up to half of the shaft of that hook, and then I'll take the other half or portions of the trade as it gets higher. So no, you have to understand with these patterns, what like the ones that are trading within a range, like the booking or the other one we went over, CRM Salesforce. They're ones that are trading like ExxonMobil. They're ones that are trading within a channel, within support and resistance areas, and it's easy to flip-flop on a trade. So booking, if you're buying booking on the support and you're buying some calls, you're selling calls once it gets up to either the middle or the higher end of that channel up to that resistance area. And then if it does reach up to that resistance area, the first day that you get a candle that's below the previous day's low candle, then hey, she got up to that resistance. She's probably going to retrace here, and you could then get into some puts and profit as she goes back down to either the middle of that channel or back down to that support area. So, it's always about the opportunity that you're seeing on that chart and where she's at compared to, the tools and indicators you're using, like the support and resistance areas. Michael Busby, I was watching your video on site, the blue 5, yellow 10, red 25. Yes, Mike, sometimes I change the colors of my SMAs, so don't, go by what color is what one. Just know that you can make your own colors, use the 10, 20, 50-day SMAs, and, sometimes a 200 if it's a longer-term trade, sometimes a 5-day SMA if it's a shorter-term trade, less than 7 days. So, yeah, don't worry about the color. You can change the color to whatever you want them to be. SMA play is momentum played to the downside, like you said. So, think what you're saying, Steve. Yes, when you're trading the breakout, once you get the clear day that you got that candle above those SMAs, then you're gonna take your profits the first day it hits that 10-day SMA line. So, no, I would not buy again there or get puts. Once she's there, wait until your next up. Now, a lot of times she will get down to it, hit that SMA, and then take off again. And that's just normal profit taking. And you have to understand that's what happens in the market. You have a big climb, it's normal to see some profit taking. So once she gets down to that 10-day SMA and you see, hey, I took my profit there, that was my exit point, and then the next day you have a candlestick that's above the previous day's candlestick entirely, then you could say, hey, she just broke out again, I'm going to ride it higher again, buy some calls or buy a spread, and you could do that. Michael, the range you're talking about, like I said, just stick with the 10, 20, 50-day SMA. If it's a shorter term trade, you could use the 5, 10, 20, 25-day, see what's working, like I said, plug in the SMAs. If you see the candles closely following a certain SMA, hey, maybe the big institutionals, funds, maybe the big traders, market makers, maybe that's what they're using for their strategy as well. Because when you get a stock that you see the candles riding that SMA, or once she gets down to that SMA, you're seeing a lot of buyers step in, that's what they're using as well. And to day trade, I have a great day trading strategy that we've been using the past 2 weeks for the first 15 minutes of opening bell that have made some insane returns. We'll go over that in another video. This video is already 2 hours and 10 minutes long. So let me wrap this video up, guys. And if anyone has more questions, just feel free to message me on Facebook or make a post in the day trading stock and options room. Like I said, guys, if you're not a member yet, sign up. SantarelliExchange.com. You could use promo code NewTrader for 30 months free, or 30 days free, and then it's automatic billing. You'll be billed normal price thereafter unless you cancel. But you're probably not going to cancel. Or you could use promo code New Year for a year of service for $1,400. So SantarelliExchange.com, and we'll see you there. I'll be in there early tomorrow morning looking to make some day trades for the first, between 8 a.m. to 11 a.m. I'll be looking for day trades. After that, I'll be looking for some regular trades. Let's see what futures are doing quick, guys. It's only 8 o'clock. Markets aren't doing much. We're not seeing any activity. That's great news that we're not down big. So I do think we're going to have a big day tomorrow, guys. So be ready. Be prepared. I think it's going to be a phenomenal day. Alrighty, guys. So have a great night. I hope you had a great weekend. Please let me know if you enjoyed this video. Like I said, it's 2 hours and 11 minutes long right now. So it's pretty time consuming, especially taken away from weekends. But if you guys enjoy this, I'd be happy to do this every weekend. So please comment in the Facebook group if you like this. That's really important to me, guys. Please comment how you like today's class. If you liked it, comment in the Facebook group. That way I could see it. I'm not seeing all the comments in here. There's too many comments in here. So we'll do another Q&A in the Facebook group. So please comment. Let me know what you thought of class tonight, and I'll see you in there. And TSC members, I'll see you in the trade room in the morning. Alrighty, guys. Take care. Have a great night, and God bless. Like I said, get signed up.